Hi, everyone, and welcome to the next installment of our Leader in Water series. We're welcoming Michael Albrecht from Ridgewood Infrastructure today. Given your expertise in the sector, we're going to be covering a lot of ground on key issues and opportunities today. But before we get into all of that, for the benefit of the audience, I thought we should kick off with just a brief explanation. If you could tell us about your professional background and experience in the water sector in the U.S.
Happy to. My background, I'm a managing partner at Ridgewood Infrastructure. I've been on the investing side for over 2 decades, the majority of which focused on infrastructure, investing in Asia, Europe, North America. Specifically within the water sector, really began in North America investing in regulated and non-regulated water investments, and then in Europe, primarily on the regulated side.
So you've really seen it all. One of your unique vantage points, I felt, is there haven't been many real public-private partnership transactions in the water sector in the United States, and you've been involved in some of the major ones that have been successful. What role do you think public-private partnerships play in your investment strategy and the U.S. water sector?
They play an important one, and it really is a function of our core competencies. So we bring a tremendous plethora within our team, a focus on operations, regulatory focus, certainly the financing side of it, and how to structure these transactions for the benefit of all stakeholders, including the community, the equity investor, the lenders, and bringing that all together to provide a solution. And within our portfolio construction, as we think about what we're creating, it provides a great ballast to the overall portfolio. But we're also not going to do, a dozen of these. There's going to be 1 to 2 of them in each portfolio as we think about them.
Well, one particular challenge that water owners and operators have faced both in the U.S. and globally recently has been the increased focus on PFAS, or forever chemicals, in the water supply. How can investment be used to mitigate the impact of PFAS for water users?
As you think about investment, it really can bring 3 solutions to cities, amongst many, but 3 that come to mind is 1, helps avoid rate shock. So private investment can help smooth these tremendous capital investments over 30, 40, 50 years to assist those communities. Another aspect is just speed to delivery of these projects. Generally, what we've observed across the country is a 25% to 50% reduction in time from notice to proceed to commercial operations, which is a great benefit for the community because you're implementing that solution sooner and eliminating PFAS more quickly. And a third aspect is really bringing that core competency and novel solutions, different technologies, innovation around ion exchange, et cetera, that can help solve those issues.
Ridgewood Infrastructure invests predominantly in the U.S. lower middle market. What opportunities and challenges do you see in this market?
I think a real tremendous opportunity is to bring solutions to various cities across the country using our core competencies, whether it be the engineering personnel we have on staff, the different approaches to financing this to avoid rate shock and help those communities, and the massive underfunding of the infrastructure across the country is a real opportunity to collaborate with all of these cities. I think a key challenge, and rightfully so, is water is a very sensitive topic throughout the public, and it's important that it doesn't want to be perceived as we're giving control of our water treatment, our water to the private sector. But what's so important in these P3 contexts is to be very transparent and work with those community stakeholders to really create the solution with them, not just for them, but partner with them to bring a full turnkey solution.
Well, you've done an extraordinary job tailoring, we've been witness to that, solutions specifically for communities. Shifting gears slightly, the Inflation Reduction Act, the IRA, was implemented a few years ago now. How do you see the IRA advancing water investments? People always talk about it in the context of energy transition.
The IRA predominantly is around many other industries, but within the water side, they've allocated more than $25 billion to utilize in both tribal nations around water scarcity and help around Colorado and all of the water scarcity issues that they're having. So we see it as a great mechanism to work with and take advantage of for those communities. And we really take a lot of time. We look at each of these available opportunities, whether it be the IRA, WIFIA, local specific state regulations and opportunities to reduce the cost of these various water projects and bring that to bear to those communities.
Would you like to explain how we accomplished that in the Fort Lauderdale transaction? Because that was an interesting example of how the rates were managed down through an innovative solution.
So there, by working with the chief financial officer, the mayor, and other key stakeholders of the community, we looked at how could we reduce the rates for the community of Fort Lauderdale and outskirting areas. And what we found was, rather than the private sector issuing the debt financing for that particular water treatment facility, if the public sector did it, it would be at a lower cost. So by partnering with the community, we actually reduced the overall cost impact to that community materially. And to your point, those novel solutions is not one party working in isolation. It's really around sitting around the table and thinking about how do we accomplish these goals. And to their credit, they were very open-minded and thoughtful around these different opportunities to bring to bear.
So, Michael, in your experience, what do you think the most important aspect of these public-private partnerships are when you're thinking about structuring a deal?
I think the most important aspect is being a good listener. And it's about hearing what that community's challenges are. And they're not homogenous with every city. It's really about listening. Is it a capital issue? Is it a speed to delivery issue? Is it a complexity issue? And as we look at different cities, how we're interacting, in the case of Fort Lauderdale, it really wasn't about capital. They're a AA rated city. It was more about bringing a solution to them that could be executed more quickly. Mm-hmm. And that was what was important to them amongst many other aspects. But it really stems to being a good listener and providing a solution that's fit for purpose.
Ridgewood has a strong focus on ESG and responsible investing, and sustainability is a key metric, an objective for water systems globally. From your perspective, how is the U.S. doing in terms of driving sustainability in the water sector, and how has the industry sought to balance, water supply on the one hand with conservation?
So overall, I think the United States is doing well, but it's still early in this journey. And if you look at the gap of water investment in infrastructure, the need, if you will, it's over $100 billion annually if you look at the American Society of Civil Engineers. So still a lot of work to do in terms of the underinvestment we need to get. And that's both through public sources, private sources working together to solve these issues. From an ESG perspective, we're very focused on how can we bring water from areas of strong supply into areas of strong demand where they don't have necessarily the supply of water. So that can be around water transmission. And as we think about that through our ESG lens, it's really important to us to help those communities solve those problems. Another area is just water leaks within the distribution system and replacing that aging infrastructure because so much water is lost from the treatment to the delivery to that household. So from an ESG perspective, the greater the amount of water we can save or reduce leakage, the better for those communities from a cost perspective as well as from an environmental perspective.
Just moving to how the U.S. water market is organized, I think one of the recognized challenges is fragmentation. How does the fragmented composition of the U.S. water market affect your investment strategy? Do you see consolidation of small and mid-sized water utilities as being achievable in the U.S. market in a short to medium term? And then are there any alternatives that you're seeing to consolidation?
It's a tremendous challenge and opportunity, the fragmentation. And to put it in perspective, there are approximately 65,000 water and wastewater systems across the U.S. And roughly, on average, each one of those systems serves fewer than 9,000 people. So in a nation of 300 million people. So, 65,000 really creates an opportunity to bring many of those systems together. And it plays very well to our investment strategy in the lower middle market, because many times the size of these systems is quite small and you need to have the right focus on it. So for example, you're not going to be writing a $500 million investment typically into these water systems. You're aggregating them over time. And that really creates operational savings, standardization ability within those water systems, and all of those benefits really accrue to those communities, because every dollar you're putting in, you're spreading over a larger population base. Mm-hmm. So the cost per household is a lot less. And that's something that I think we'll see on the state level, the federal level, more focus on that consolidation for the benefit of those households.
Let's discuss funding, because that is a perennial issue across multiple different asset classes in the infrastructure space, and including water. Funding, and you've alluded to this as well already, Michael, for U.S. water facilities has consistently lagged, the investment needs. Water industry economics generally not well understood. What do you see as the main sources of capital emerging for the water sector? And, how do you see investors, like Ridgewood, overcoming, investment issues?
Well, I think we're going to continue to see a greater focus. As you noted earlier with PFAS, you're going to see pockets of capital both on the federal and state level, and different programs come to light as challenges within the water and wastewater industry become more predominant. And on the private side, I think we, on the private sector, can play a really big role in partnering with the public in terms of funding these opportunities, because they're very long duration assets. They have long, useful lives. And that allows the private sector to earn a reasonable rate of return over a long period of time, helps avoid rate shock, and really work with the public sector. And I think the prime example you highlighted earlier down in Fort Lauderdale of the public and private sector working together is emblematic of that theory. It takes the theory into a reality to benefit those communities.
As a universally shared resource, water represents almost a uniquely national and international issue. It's acutely affected by national interests and regulatory frameworks, but also by international politics and trends. So if you were to look in the future now, how do you anticipate the water industry in the U.S. evolving and changing, say, over the next 10 years?
I think there are two major themes that will continue to evolve over the next decade. The first is the consolidation theme that we spoke about, whereby many of these public water systems combine in order to drive those cost efficiencies. That is just going to be required given the vast underinvestment that's taken place over the last century within the water sector. Another is really the P3 market. And what we're observing is more and more states driving legislation to make it easier for those communities to leverage public-private partnerships and really manage it as they see fit. So, for example, in Florida last year, they passed legislation that gave each of the underlying cities more flexibility in how they utilize public-private partnerships. And that will catalyze the use of those nationally, candidly, as that continues to grow as part of a solution set.
Well, Michael, thank you so much for joining us today. There's been, as I expected, a wide-ranging discussion touching on many of the different aspects of complexity, challenge, but also opportunity in the U.S. water sector. So appreciate you taking the time.
My pleasure. Thank you.